Hello, fellow investors. I'm Ben, and this is GVD Investing, where I break down the latest stock market news, analyze stocks, and share my personal investment journey in hopes of making us all better investors.
In this video, we'll take a look at my favorite renewable energy penny stock, a company in a booming industry with years of exponential growth ahead of it. And no, it's not solar, it's not wind, and it's not EVs. I don't want to waste your time, so let's get to it. So, my favorite renewable energy stock and a company that I'm extremely bullish on is Greenlane Renewables, ticker GRN.V on the TSX Ventures. I think this company has an excellent opportunity to capitalize on the rapidly growing renewable energy industry in Canada and globally. With Biden winning the election, it should help accelerate the push to more renewable energy sources in North America. Europe is already light years ahead. And this company gives exposure to a renewable energy company that isn't solar or EVs. The stock is currently sitting at $2.31 a share after a 96% run-up in December, even after pulling back a bit before the end of the month. They currently have a market cap of $246.5 million Canadian, with a price-to-sales ratio of 14.5 and a forward price to earnings of 115. We'll take a deeper dive into the financials in a sec, though. First, let's take a look at what the company does. Greenlane is a pioneer in the rapidly emerging renewable natural gas (RNG) market. As a leading global provider of biogas upgrading systems, they help waste producers, gas utilities, and project developers do more with biogas, helping them turn a low-value product into a high-value, low-carbon renewable resource. Greenlane's biogas upgrading systems are marketed and sold under their Greenlane Biogas brand. Their full system solutions remove impurities and separate carbon dioxide from biomethane in raw biogas to create clean RNG for pipeline injection, liquefaction, or direct use as a vehicle fuel. In fact, Greenlane claims that over time, Greenlane biogas upgrading systems have collectively removed more than 6 million metric tons of greenhouse gases from the atmosphere. That's the equivalent of removing 1.3 million passenger vehicles from the road every year. So you might be wondering, what is renewable natural gas? Well, RNG comes from the gases released from decomposing human and animal waste, basically wastewater, landfills, farm, and food waste, whereas traditional natural gas is a byproduct from non-renewable fossil fuels. RNG is essentially renewable because it comes from humans and animals, and they will always produce waste. The problem is, historically, renewable natural gas, though it is renewable, has struggled to become a viable, widely adopted solution because the methane and other off gases produce harmful emissions if they aren't filtered properly, and the filtration process reduced efficiency to the point where it didn't make sense economically. Fortunately, this is where Greenlane comes in. Every biogas upgrading project requires its own unique solution. Biogas produced from landfills is different from that produced at wastewater treatment plants, which is different again from that produced on farms and from food waste. So Greenlane's solution as a company is to offer their customers a choice of 3 leading biogas upgrading technologies: water wash, pressure swing adsorption, and membrane separation. Most importantly, they've built a team with deep implementation expertise who collaborate with their customers to evaluate project objectives, identify technology solutions that work, and advise on and enlist partners to assist with anything from financing and siting through permitting and RNG takeoff. One thing I actually really like about this company is that even though they've only been listed on the TSX since 2019, they've actually been in business for over 30 years. It's rare to find a company that's a penny stock that has been in business for 30 years. Most penny stocks are new companies or startups. If you take a look at their website, it says, "We're entrepreneurial by nature and problem solvers to our core. We're also grounded by more than 30 years industry experience helping our customers recover value from waste. We've been working on biogas upgrading since before it was considered a market. We understood the potential of RNG early, and as a result, are well positioned to help accelerate the rapidly growing biomethane market. Today, we are ranked number 1 in installed capacity, having delivered more than 110 biogas upgrading systems in 18 countries and counting. First to market in 11 of 18 countries where our systems operate, we're also proud to have supplied the systems for the largest RNG production facilities in North America and Europe. Biogas upgrading sales are forecasted by industry to grow at minimum 30% compound annual growth rate over the next 5 years in North America and Europe. Our demonstrated leadership in biogas upgrading, scope and breadth of product offerings, and 30 plus years of industry experience are fierce competitive advantages. In addition to sales of reliable biogas upgrading systems, Greenlane is launching a partnership business model with attractive economics and recurring revenue and profits from RNG offtake agreements. This will provide opportunities for growth and improve shareholder value. Greenlane also has really strong IP with technology advantages, the widest range of applications, and 14 patents and 28 device titles. They also plan to expand beyond equipment sales with lucrative long-term contracts. With a market opportunity growing to over $170 billion in annual renewable natural gas sales. One of the things I like most about this company and the industry is that it's not really a matter of if, but when this technology will become more mainstream. Unlike less proven renewable technologies like hydrogen, RNG infrastructure is already in place as it can be injected directly into existing natural gas pipeline systems. It also has more diverse application ability as it can be used to fuel vehicles in addition to heating homes and powering gas appliances, all without any added carbon emissions, using plentiful and renewable resources. Most importantly, RNG eliminates the need for fracking, which is by far the most environmentally detrimental result of traditional natural gas production. Around the world, countries, municipalities, and companies are rolling out plans for net zero greenhouse gas emissions by 2050. RNG is rapidly shifting from a niche to a mainstream drop-in substitute for natural gas, and gas utilities and governments are targeting 10% to 20% RNG by 2030. In Canada, BC has regulated for up to 5% RNG by 2022 and 15% by 2030. Quebec has adopted regulation requiring 1% RNG by 2020 and 5% by 2025. In the States, SoCalGas announced commitment to 5% RNG by 2022 and 20% by 2030, and an Oregon bill signed targeting 15% RNG by 2030 and 30% by 2050. In France, ENGIE announced 800 million euros in funding in the next 5 years in support of 10% renewable natural gas by 2030. In Italy, the European Commission approved 4.7 billion euros of public support for biomethane and biofuels. And in Denmark, they reached 11% RNG in 2018 after starting from zero in 2014, and they project to have 100% renewable natural gas by 2035. Keep in mind that Greenlane is already the global leader in biogas upgrading, and it's their systems that are being used in the countries that are mandating increased RNG usage. This gives Greenlane a significant global opportunity. The International Energy Agency World Energy Outlook in 2020 projects compound annual growth rate of 21 to 24% between 2020 and 2040. And BP Energy Outlook projects a compound annual growth rate of 15% between 2020 and 2050. So either one you look at, it's going to grow pretty quick. The total accumulated value of biogas upgrading equipment is estimated at over $90 billion, and that's just equipment sales. In July 2020, Greenlane announced a joint venture agreement with SWEN Impact Fund for Transition, a fully dedicated 170 million euro infrastructure fund for renewable gases in Europe. The fund is managed by SWEN Capital Partners with 5 billion euros of assets under management, and the joint venture will combine Greenlane's market presence, technical expertise, customer contacts, and industry experience with SWEN's financial backing. The joint venture will provide innovative turnkey solutions, removing burden of ownership of Greenlane's clients by replacing initial capital outlays with a monthly fee. This is huge for the company. The fact that they're a global company and they keep striking deals this big, especially in Europe where renewables are ahead of where they are in North America, bodes very well for this company moving forward. Let's take a look at some key industry developments and see what other companies are saying about renewable natural gas. Fortis, which is one of Canada's largest utility companies, said renewable natural gas blends seamlessly with conventional natural gas in our distribution system, and our target is having 15% of our gas supply be renewable by 2030. SoCalGas, which is a company out of California, has announced its vision to be the cleanest natural gas utility in North America by committing to replace 5% of its traditional natural gas supply with renewable natural gas by 2022 and 20% by 2030. UPS announced a 3-year commitment to purchase 6,000 natural gas-powered trucks through 2022 and agreed to purchase 23 million gallon equivalents of RNG over the next 7 years, making UPS the largest consumer of RNG in the transportation industry. Microsoft said that by 2030, they will be carbon negative, and by 2050, they will remove from the environment all of the carbon the company has emitted since it was founded in 1975. BlackRock, who are an asset management company, said climate change has become a defining factor in companies' long-term prospects, and we will see a significant reallocation of capital sooner and more quickly than most anticipate. That was the CEO, Larry Fink. Amazon's founder, Jeff Bezos, announced the launch of a new $10 billion Bezos Earth Fund to combat climate change. And Anheuser-Busch, as part of their ongoing commitment to sustainable logistics and reducing carbon emissions, are transitioning more than 180 trucks to renewable natural gas. So there's a major transition going on. Even the oil companies are jumping on board. In July, Chevron said they're partnering with Clean Energy Fuels on Adopt-a-Port program to supply truck operators at Los Angeles and Long Beach ports with RNG. In April, Shell announced net zero emissions ambition by 2050. In February, BP announced goal to be a net zero carbon company by 2050. And in May, Total announced new climate ambition to reach net zero carbon by 2050. So even the big oil companies are on board with this too. Continuing on, if we take a quick look at their latest financials, in Q3 2020, they generated $6.5 million in revenue with a gross margin of $1.7 million or 26%. They made a net income of $700,000 and they have $5.7 million of cash in the bank. They have a sales order backlog of $43.8 million and a sales pipeline of $690 million. The sales pipeline aren't guaranteed projects, but jobs that have a good probability of converting over the next 24 months. But if we look at the revenue grew from $2.9 million in Q1 to $6.5 million in Q3. Sales backlog is growing rapidly every quarter, and their sales pipeline has gone from $450 million in 2018 to $690 million in 2020. So they're growing really fast, and this company has lots of potential for major projects globally going forward. And Greenlane seems to have a good management team in place to take advantage of these market opportunities. Brad Duville, their president, CEO, and director, joined as president in 2017 after a 25-year career in the natural gas commercial vehicle industry as a founding member of Westport Innovations in 1995 and Cummins Westport in 2001. Linda Freeman, their CFO, joined as CFO in 2019 with 22 years of financial experience and was previously CFO of TSX-listed Altera Power, a global renewable energy company. And Brent Jacklin, Senior VP of Sales and Service, joined in 2009 to start up the North America office, bringing 20-plus years of experience in alternative energy, natural gas, and renewable natural gas sectors. They have a lot of experience. Their whole management team has over 20 years each of experience in the industry. It's good to see people that know what they're doing running the company. So, let's do a quick recap before we take a look at the stock performance. Here are some of the key investor considerations. They're a rapidly growing pure play in the RNG space. They have the largest global supplied capacity to date, 110 systems in 18 countries. They have a current contracted backlog of over $43 million, which has increased 350% year over year. They have a current sales pipeline valued at over $690 million, which right now with a $250 million market cap, that's a pretty good deal if those sales materialize. They have a healthy margin-based business, fast approaching profitability. They're expanding through partnerships to recurring revenues and profits with build, own, operate model. They have strong intellectual property comprised of patents and trade secrets. They're the only company that offers all three main biogas upgrade technologies. There's a substantial global market opportunity for equipment sales estimated at over $90 billion. And there's significant market drivers, demand from governments, utilities, corporations, and consumers for low carbon energy. Given all of this, I'm actually surprised this company is a penny stock. I don't see very much downside risk at all with this company. If you take a look at the upside potential and then weigh that against the potential risk of this company, I think it's minimal. I don't see the likelihood of them going bankrupt at all, and the potential growth for this company going forward is absolutely immense. So let's take a look at the stock performance. So if we take a look at the stock charts here, the stock is currently sitting at $2.31 Canadian. It's gone up 78% over the course of December, even after a 8% pullback towards the end of the month. The stock's done really well, but the one thing I noticed that was the most apparent was how hot the stock's been since the U.S. election and the news of Biden winning. Before the election, for the whole year, the stock had gone up 12.5%. in 6 months prior to the election. But from November 4th to the end of the year, the stock went up 330% after Biden won the election. So the news of the Democrats winning and the likelihood of them putting more emphasis behind climate change has really helped this company, which does make sense because he's already announced something like a $2 trillion funding package behind renewable energy. So if that does happen, that could be really big for Greenlane. But the stock has definitely benefited from Biden winning the election. And I think with the inauguration, that'll really help this company going forward. There is some risk with it being so hot as of late, though, that it will have a bit of a pullback. It really hasn't sat this high for most of the year. So even though it has dipped 8% at the end of the year, being a growth stock, there's a chance that it does pull back a little bit harder. Let's take a look at some of their financials and revenue projections. They've got a $246 million market cap, forward PE of 115.5, and a price of sales of 14.5, which the forward PE is a little bit high, and the price of sales is reasonable. It's starting to get a little bit high, but 14.5 is not bad for a growth company, especially with revenue that's forecasted to grow as quickly as it is. The 50-day moving average is $1.47, so it's definitely come up quite a bit, and I could see it pulling back below $2, closer to $1.50. But it's been up quite a bit lately, 425% over 52 weeks. So I don't know if it'll ever hit the 150 again. If it does, it's an absolute steal for this company. But even anything around $2, I really think is a pretty good deal, given the market cap being only $246 million and they have $690 million in the pipeline. If even those sales come to fruition, you're basically buying the company now at half of their projected sales over the next few years. So that's a bargain. In the last 12 months, they've pulled in just under $17 million in revenue. Quarterly revenue growth is up 31.2% year over year. They have $5.74 million in cash. Unfortunately, they do have a little bit more debt than cash, which is never a great thing, but it's not drastically higher than their cash position. So I'm not overly worried about that, given their rapidly growing revenue. And they're actually profitable too. They had $3.27 million in 12 months. So they are profitable for a growing company. And if we take a look at their projected revenue growth, so this quarter, analysts project revenue to grow 165%, next quarter 209%, the current year 150%, and next year another 100%. So this company is growing really fast, doubling every quarter, more than double every year, and projected to do that for this year and next year, if not more into the future. They've got a 1.5 strong buy rating, and 6 analysts have a price target on the stock of $1.86. So it's definitely a little bit pricey, but I wouldn't worry about it too much. Any pullback on this stock is a great buying opportunity. And if you want to get in right now, then I would just suggest buying smaller amounts until there is a bit of a pullback. But given the revenue growth, I think with revenue of $22 million forecasted for this year, I think $3 is a fair price target for the next few months. And if they can hit $45 million in 2021, I think they could easily break the $6 mark, potentially approaching $7 or $8 by the end of 2021. So I think there's a lot of room for growth in this stock this year, next year, for the next decade. As long as they're able to sustain this growth, I think this could be one of the best renewable energy stocks available on the market for 2021. So I'm not really sure what else there is to say about Greenlane. I love this company and the potential going forward. They are the largest player in a rapidly growing industry that is primed to take off over the next decade as renewable energy and RNG specifically becomes more mainstream. They have a proven track record, global exposure, solid IP, good financials and revenue projections, and market conditions that should really benefit the business in the coming years. I see this as a far less risky investment into renewables than most of the EV sector, and certainly any hydrogen company. I like this company so much that I decided I had to invest in them. I bought my first shares on October 22nd at 53 cents per share, and since then I've slowly added to my position, bringing my cost basis up to where it is now at 88 cents. Even after pulling my cost basis up, I'm still up over 150%, but I really want to grow my position to at least 1,000 shares. I'd like to try to keep my cost basis under $1.50 though, so I plan to keep adding to my position on any pullbacks of 15% or more until I've accumulated those 1,000 shares. The main thing, as always, is just be patient. So I think that's a wrap, ladies and gents. If you've made it this far, thank you so much for sticking with me this whole time. Please tickle that like button. And if you want to follow the journey and be notified of future videos, please smush that subscribe button. Thank you very much. Until next time, be safe, wear a mask, and invest wisely.